This is The Gist, the essential podcast for the discerning listener.
Welcome to The Gist. It is Tuesday, July 7th, 2026. I'm John.
And I'm Mary. We are your smart friends on the go, turning the day's noise into clear signals. Let's get right to it.
Today's Gist view takes us to Brazil. The government is stepping in to rescue its own debt.
That's right. Brazil's National Treasury Secretariat is the agency that manages public debt. Right now, they are buying up their own inflation-linked bonds. We are talking about a massive market here, almost 450 billion United States dollars.
Investors are bailing out. They see the government spending too much and they want out. So the state is stepping in as the buyer of last resort.
Think of it like a restaurant owner buying all their own empty tables just to make the place look packed. It creates an illusion.
Exactly. And let's look at who benefits here. By stepping in, the Treasury hides the real cost of all that government spending. It distorts the market's price signals. Normally, when bond prices fall, it forces politicians to cut budgets.
But this intervention gives politicians a free pass. They get a longer runway to delay unpopular budget cuts. Meanwhile, the state, meaning the taxpayers, absorbs the risky debt that private investors just rejected. The cost of bad spending gets quietly socialized.
It's a classic short-term fix with a long-term bill. Shifting to the global overview, the Great Gold Rush is taking a breather.
Gold's 3-year bull market, a sustained period of rising prices, has finally ended. Investors are locking in their profits and stepping back.
Interestingly, they aren't aggressively betting against gold either. Nobody wants to take out massive short positions just yet. They're just sitting on their hands.
We're also seeing a shift in stock picking. Value investing is having a moment. That is a strategy where you buy stocks that are trading below their true intrinsic value. But financial analysts are calling this a temporary market quirk, not a permanent change in how people invest.
Meanwhile, geopolitics is dealing with its own quirks. The NATO summit in Turkey feels less like a strategy session and more like damage control.
Transatlantic tensions are running very high. European leaders seem completely focused on appeasing Donald Trump. They are prioritising keeping him happy over building a long-term structural alliance strategy.
The power dynamic there is obvious. It is all about short-term political management, not long-term defence.
Speaking of short-term political management, let's look at the European perspective. We start in France.
Marine Le Pen just caught a very weird break from a Paris appeals court. She is the leader of the National Rally, or RN, which is France's main right-wing populist opposition party.
She was convicted of embezzling European Union funds to pay her party's staff. The court upheld that conviction, but they reduced her ban on holding public office.
Right. She can still run in the 2027 presidential election. But here is the catch. She has been sentenced to 1 year of house arrest. She will have to wear an electronic ankle monitor.
A presidential candidate campaigning with an ankle monitor? It is a massive judicial flinch. The courts are terrified. If they ban her completely, they delegitimise the 2027 election. So they compromised.
It's a mess. The establishment is using the courts to hobble a populist challenger, but they lack the courage to fully separate legal consequences from political outcomes.
Across the channel, Nigel Farage is playing a similar game. He is the leader of Reform United Kingdom, a right-wing populist party.
Farage just resigned as a Member of Parliament for Clacton. Why? To immediately trigger a by-election.
He is facing parliamentary investigations into undeclared financial support. This includes money from a convicted fraudster, plus a massive £5 million gift from a crypto billionaire.
So Farage quits to run again. He is framing it as a people versus the establishment campaign.
Both he and Le Pen are using raw electoral popularity as a shield.
They are betting that angry voters will gladly overrule the institutional watchdogs. The power flow here is simple. Trade public outrage for personal immunity.
Finally, down in Italy, a big warning light is flashing. Fabio Panetta is the governor of the Bank of Italy. He just sent a very public plea to the ECB.
The ECB is the European central bank. They control the money supply and set interest rates for the entire Eurozone.
Panetta is warning them not to repeat the massive interest rate hikes of 2022. Back then, they hiked rates to fight an energy shock. Now, we have a Middle East energy shock, but the European economy is much weaker.
Panetta is pointing out a harsh reality. Real interest rates are already sky high. European governments are deeply in debt. If the ECB raises rates again, governments will be forced into an impossible choice. They either go broke or they get voted out of office for slashing public services.
It is that exact same tension we saw recently in Germany's budget struggles. High rates pit financial survival right against political survival.
That brings us to today's temperature check. Across the board, we are watching a global stress test of accountability. From Brazil hiding its debt risks, to French courts flinching, to Farage dodging watchdogs, the common thread is clear. Political survival is constantly trumping institutional discipline, and the bill for this avoidance is being quietly passed on to the public.
Spot on. And if you enjoyed today's breakdown and want to stay ahead of these trends, you should absolutely get the gist in your inbox.
Yes, you can subscribe to our daily newsletter for free. Just click the link right there in the show notes. It's the perfect way to stay sharp over your morning coffee.
Thanks for listening. We'll be back tomorrow.
The Gist, News Digest, and podcast are entirely written and produced by artificial intelligence. The Gist is out 3 times a day, every day, providing you with a liberal perspective on what to expect next. For more information and donations, visit thegist.online. Thank you for listening.